Yeah, well, I think, first of all, the Fed's already signaled that they're going to start moving on September 18th. So it is a 25 versus 50 question. I'm not sure they put too much weight on one data point. As your colleague just mentioned, if there's a huge upside surprise, that might start a debate. But all the data suggests, the labor market, the short-term indicators, suggest that the economy's softening. So everything's kind of lining up for a 25 basis point cut in September, maybe one more later in the year, but a gradual soft landing. We're not going to be racing down the same pace we raced up to 5.25.
When you look at the last two payrolls numbers, are they telling you in aggregate that we are starting to see the beginnings of material deterioration in the labour market that is perhaps consistent with a recessionary activity, and the Fed need to get ahead of this?
Yeah, we're not in the recession camp, right? So the labour market has to slow. The U.S. economy has to slow, right? The reason we had inflation and a big spike in inflation was the economy was running too hot. And if you think the U.S. is a 2% economy, and that's what we think, we've got to run a little bit below 2%. So payrolls at 140 and a few soft quarters of growth in the ones are fine. If that starts to really deteriorate sharply, then we're in a different narrative, and we've got about a 30% probability of a recession. But the baseline is a soft growth, softening payrolls, growth with a one handle into early 2025, and then we kind of go back to the two.
Now let's bring in government spending and deficit in the fiscal end of town as well. And that's really going to be an issue later on tonight with the Harris-Trump debate, and perhaps we might get some clarity on everything from US-China trade relations to the deficit to the dollar. Are there going to be any implications here for the outlook?
Yeah, well, we'll be listening because we need some more clarity on both sides. Neither camp seems to be overly concerned about the path of the U.S. debt trajectory or deficits. Not all the deficits are bad, right? If it's a supply-side thing like the Inflation Reduction Act, we get a little bit of bump in potential growth. We get a little bit of bump in productivity. But, yeah, everything else constant, higher debt, higher deficits, going to kind of lift the equilibrium interest rate. So that's another reason to maybe be a bit more cautious on the rate cuts.
Paul, Sherry has a question.
Sherry, hi.
Yeah, thank you, Sherry. Hi, Paul. Thanks for joining us. I do want to talk about a disinversion. And, of course, this could be a good thing, obviously, because it's a typical sign when the Fed is set to cut rates and the market is getting ready for that. Is there anything that tells you about it that things are a little bit bearish? What is it telling us exactly, do you think?
Yeah, well, the yield curve slope is one of the indicators we look at. We also have other kind of inflation rules. So I think what we've seen is with that big drop in recent months at the long end of the curve, the market's kind of pricing in a slower economy and Fed rate cuts. And remember, the Fed's rate cuts don't impact the economy directly. It's through the financial conditions and through the bond market and through spreads and everything else. So for us, this is just the market pricing in a bit softer growth and a bit softer inflation, and it's consistent with the soft landing scenario. So again, we don't put a ton of weight on the slope of the yield curve. It's one of the indicators we look at, and it seems to be lining up reasonably well with everything else, at least for now, for the soft landing narrative.
Where do you see 10-year by the year end?
Yeah, so we're not rate forecasters, but our U.S. economy has a kind of with a four handle, right, in the low fours. When we get, we're going to have to slow down, as I just mentioned to Sri, for a couple of quarters and then come back up. So when all's said and done, the Fed should land sort of 3-ish. That puts the 10-year kind of in the low fours. But we're going to maybe spend a little bit of time below 4. End of the year, probably close to a 4 handle.